Welcome to this market special from Business Today. I'm Udayan Mukherjee, with me is Abha Bakaya, and our guest for today, an old hand in the market, Dharmesh Mehta, MD and CEO of DAM Capital Advisors. Dharmesh, good to see you after a long time. How are you reading this big pullback in the market? I mean, does it have more legs to go, or is this the point where you start getting a bit cautious again?
I will be cautious again. I think the markets have rallied in a strong way in the last 1 month, as you've seen. And as we say, the winter is coming. So we need to wait what happens in winter, especially on the geopolitical front. So I wouldn't get too much carried away on this current bullishness and would be very cautious in my approach going forward.
What is behind this pullback? I mean, is it only the fact that there has been consensus pessimism before the start of this pullback, or do you think the fact that there is some return of FII money which has lifted the mood in the market? Are the roots technical, or are the roots fundamental to this very strong pullback?
I would say some part of it is fundamental also, because if you look at it, the inflation looks like peaking out. The commodity prices globally have peaked out. The rate seems to be peaking out now, I think so, especially in India. So overall macro environment has actually benefited India in the last few months, as you can see. And the worst fears which people were thinking of, higher inflation, higher interest rate, that doesn't seem to be coming true. So a little bit pullback is based on that because of the softening of commodity prices globally. And overall, I think the market was oversold in the recent months. And still liquidity in India is very strong. So if you look at it even today, I believe the mutual funds are still on all-time high cash. And despite all the paper supply which came in last 1.5 years, and the debacle of two large IPOs, even post that, the retail interest is still very strong in India. And that has also taken all the selling pressure from FIIs. So liquidity is good. India looks like a safe haven and much better place than global markets. That's the reason I think so some pullback has happened. I still believe that's more domestic money rather than foreign money.
How do you see the domestic money behaving from here on, Dharmesh? I mean, when you speak to HNIs now, or even retail, do you get the sense that they believe that the road ahead could be rocky and they are probably taking some money off the table? Or do they believe that the market will get back to highs sometime in the next couple of quarters and they are actually very gung-ho and bullish?
I would say retail interest is still very strong. But yeah, they're also very cautious, and I won't be surprised if there is some profit booking coming in next few weeks or months. So clearly they have money, but they are cautious because they understand that the geopolitical situation is still not in a great situation, and that can suddenly overnight turn ugly. So clearly they will be cautious and booking some profits in the coming months.
All right. Clearly, Dharmesh, while opinion is clearly positive for the India story in totality, but currently that little bit of concern with regards to whether or not this is just some amount of traction before we once again see a bit of a sell-off, that question remains. If we dive into that a little bit more, what do you feel would be the biggest factors that could possibly lead to that at this point? Would that be largely tech-driven? Because most of the other factors at play right now have been largely priced in.
See, if you look at overall our index composition, I think so financial sector looks to be in a good shape. The banks are still reasonably valued. So I don't see a large downside in the banking sector. The large heavyweights like Reliance, ITC, they're also in a good situation. So there is a limit for the index to go down substantially. Okay. I think so there's a downside protection also for India. But the upside the other problem is that India has outperformed all emerging markets. So clearly the upside also will take time to come. And only when the fundamental situation changes and when there is a risk on bet in the global world, will you see if FI's money coming into India, because India has outperformed. So it's not the first market people are dying to buy into, but they will start buying as soon as they see, the risk of global risk is off and they want to start putting money into emerging markets. And obviously India will be the first choice for them. So I see some kind of, stagnation coming in the next few months, and will take based on what the events happen in the coming few months globally, and on that basis, more money will start flowing in.
So you think, Dharmesh, there's a chance that the market will go back and revisit the lows of, say, around 15,200 on the Nifty, where we bounced back from, pierce it and go lower? I mean, what is your expectation about the bottom formation?
I don't think so. We'll test the bottom which we tested earlier because things are improving for India, as I said, in this quarter onwards because of the fall in commodity prices. We have had a decent monsoon so far. So the inflation has also peaked out. So I doubt that we'll test the bottoms, but I think the market will remain flat for some time. Look for events. And when you see, numbers coming back, because we still just seen one quarter of numbers post the oil price hike. If you see demand continue to grow in even not in a very strong way, but decent manner, I think so market will steadily climb up, but definitely doesn't look like testing the earlier bottom. Unless oil goes to 140, $150, then all bets are off.
Financials have started improving in terms of market performance after a long time, and their earnings are holding up reasonably well. But the underperforming sector which has started to come back in the last few weeks is autos. I mean, it's a clear standout sector. I mean, the M&Ms and Marutis of the world. Where do you stand on that lot?
I would say you will see decent demand coming back, especially with good monsoons. And we're still not yet out of the monsoon. We still have 2 more months. But so far, it looks very encouraging. And if the monsoons are good, generally auto sector should do well. You have big festive season coming in. And with inflation taming down, I think so even the festive demand will also pick up. And autos were oversold, as you can see, last 6 months back. I'm reasonably bullish on auto sector.
There are several huge IPOs that have been shelved, Dharmesh, given the market volatility. Given the kind of valuation we've seen some of the original listings trading at currently, do you feel there'll still be market appetite for some of these IPOs when they hit the markets over the next few months?
See, I would say that the door is shut, but the window is still open. So you will see a few IPOs coming in the market at a reasonable valuation, and they should get demand. I expect few IPOs to, at least we are leading one IPO, which hopefully should be hitting this month. And selectively, few IPOs will happen. Yes, there are almost like 125 IPOs which have been filed and more will file. Not all will go through, but it's not as if none will happen. Some of them will go through with reasonable valuation. And yes, valuations will get corrected a lot from what people were expecting earlier.
What are you cautious about, Dharmesh, after the pullback? What sectors would you stay away from at these kind of levels?
Well, I would say still the global economy is in trouble. So I would stay away from sectors which are very much dependent on global economy and global growth. So that will be clearly something which is I would be really cautious of, especially if the valuations have gone up in the recent times. I would still rather be placed on India bets, especially manufacturing, which I think so with the government scheme of things, the kind of reforms they've been talking about, I think the manufacturing will be a very, very strong sector to bet on. So anything which is domestic, I would rather focus on that. Global sectors, I will still worry about.
So would that include IT, pharma and chemicals, specialty chemicals, or you're selectively bullish on any of these three?
Chemicals, I am still bullish, subject to valuation, because the valuation is still very expensive, because a lot of anti-China and those kind of things are still happening for which chemical sectors benefit. But pharma and IT definitely will have some kind of, headwinds against them.
You talked about some of the heavyweights which are starting to look stable now, Dharmesh, but do you feel that interest in the market will remain with a select few stocks? Do you see wider participation as we've had before in the best of the rally?
I think the participation will still be in the larger caps. Okay. The mid caps and the small caps will still take some time. So some of them are rebounded, but I believe there will be challenges going forward unless and until you see a sustainable bull run. The mid cap and small caps will face some kind of hurdles, and there will be some price cap on it. And people will still like to be on large caps because if something goes wrong globally, which nobody knows, at least they can exit and go back in cash. While in mid caps, you generally can't exit and go back in cash.
What is the right way to play the financial landscape right now, Dharmesh? I mean, because there are some people who want to stick to quality there and buy only 3 or 4 of the top private sector banks. There are some who like the larger NBFCs because the delta of movement can be very, very sharp. And there are some who are taking big bets on the PSU banks now because of the cleanup of their balance sheets and the road ahead. Of these 3 clusters, what seems the most exciting to you?
I would still be in the larger sector private banks because the valuation in which you're getting HDFC, ICICI today also They're very attractive, and for such large caps in this kind of scenario, I think it's a no-brainer. And if at all somebody has to bet, I will also like to go in the smaller banks, private sector especially, maybe bet 10-20% on that. But 80% of my portfolio will be in the larger banks because they're still at a very good valuation. And things are improving, and I believe they will be the big beneficiaries.
What about the non-banking plays? I mean, things like insurance, brokerages, the tertiary kind of non-lending space. How would you approach that?
I would say brokerages and the rest mainly depend on capital markets, which doesn't look like you're going to have a 2022 again. So clearly they will be suffering, or I wouldn't be keen to that. Insurance definitely is a good bet. I would like to go ahead and play through the private sector insurance companies.
Fair enough. Dharmesh, in terms of the kind of participation that you also see from retail investors, do you feel that the stock markets will continue to be the asset class of choice? We've seen crypto, of course, completely nosedive in terms of the kind of valuations we're seeing in the crypto market. Gold hasn't necessarily had the kind of rush that one would expect at a time like this. What's your sense when it comes to asset allocation going forward?
I would still be remaining equities because especially in India, the growth is very good. Valuations have corrected, which was not the case. Last year was a seller's market. This year is a buyer's market. So clearly you're getting a lot of good companies at decent valuation. So in that scenario, I'd rather be overweight on equities than any other asset class.
So finally, Dharmesh, when do we see a bull market again? I mean, because there are a lot of people who believe that the next 12, 18 months might be difficult. I mean, we might be ranging, but we won't have the resumption of the uptrend quite yet. Do you subscribe to that view, or do you think the markets might surprise us?
Market will surprise us, especially because it's an event-driven market. If tomorrow morning the Ukraine problem gets solved, you may have a panic buying because the kind of liquidity which is available in the market with the domestic funds and foreigners who haven't entered India. I would see in the next 3 to 6 months, the FI flow also moving up. FDI flow has actually negated the FI outflow in last year and current year. I think the FDI flows will continue with the kind of government reforms and the PLI scheme which they have announced. So FDI flow will continue in India, and FI flows will also start flowing in as soon as you see some kind of a situation, a global situation getting solved. And on top of it, we already started seeing private equity players looking to invest in India again, which they were actually sellers last year. But this year, as we talk, we almost running few deals for them. There's a strong interest come back for them to invest in India. So I think the overall liquidity available for India is very high. So clearly looks like next year you can't expect the return which you got in FY22, but there will be still decent amount of money to be made, especially with the correction in the large cap which has happened. So I would definitely be invested in India, but being cautious.
Dharmesh, always a pleasure hearing your thoughts. Thank you very much for joining in today.
Thank you, Udayan. Thank you, Abha.
If you like the video, do like, comment, share and subscribe.